Hi, good afternoon. You're watching Closing Trades right here on ET Now with me, Aisha Faridi, Anisha Jain in the studios. And for the market, we're clearly, right now at least, at the day's highs. While the day's highs doesn't mean that we're in the green by any standards, but we've recovered from the session lows. Remember, at one point in time, we started off lower by about 0.5%, plunged from there, and from there, we're seeing a marked recovery come in. So what's leading the recovery? It's actually technology, surprisingly. So let me just bring up the list of movers here, and largely some of the earnings reactions coming in here. I can say that about a Zensar, about an Intellect Design. It's not the case really with the large cap IT names, but it's the mid cap of the IT universe which is actually holding out better. Then, of course, you've got Aisha, which has shot up about 6% after its numbers. IndusInd Bank, the strength there continues, 1.6% higher for IndusInd. Axis is holding out very strong. M&M is back in the mojo, and so is Tata Motors and SBI. So a couple of banks and autos, they are the ones which are actually leading the recovery as we speak. Hindalco, that continues to be the eyesore. That's still down about almost 3.5% as we speak, in continuation with the lag that the stock saw yesterday. And L&T as well continues to be a drag still. In fact, the entire metals basket is dragging. And of course, the key on our radar this afternoon is the Supreme Court observations, which they're going to entail shortly from now in the Adani Hindenburg case. That, along with the India CPI print, is going to be something that the market is going to be keeping on its radar. But Anisha, what are the stocks which are active?
Well, of course, earnings we're waiting by for Cipla, expected to come any point of time from now. So ahead of that, that stock is in focus. Tata Motors is something that we're watching out for, and the first dividend announcement in 6 years is something that the street is watching. And Manappuram ahead of its earnings is a bit nervous. That stock was trading with a cut of almost 5%, recovered from the lowest point of the trading session, but still down about 3 to 4%. Talking about individual stocks, then of course Intellect Design, Zensar and Eicher Motors. These are the three star performers and the big earnings dhamaka per se of the trading session today. Intellect Design is excited about the deal pipeline being quite strong. The fact that the revenue has jumped up by 12% on a sequential basis, 40% plus growth on profitability on a sequential basis as well. Zensar Tech, wherein the street was expecting a decline in revenue, actually reported a profit. The valuations are inexpensive. And then Eicher Motors, of course, the margin performance was quite strong. Z Entertainment, however, is down in the trading session, cut of around 3%. There seems to be a bit of setback and a roadblock for the proposed Z-Sony merger, because and there are some approvals pending with respect to Shirpur gold case as well, so we're watching out for that. And then the MSCI impact could be seen on a couple of counters. Max Health is reacting positively, surge of 4 to 5% there. And Ujjivan Small Finance Bank is also a result reaction plus the impact of MSCI. So all of these stocks are quite excited. In fact, before I go to our technical guests as well as the fundamental guests, let's listen into the bite coming in from the management of Eicher Motors, because that's the key star performer in the trading session today. 6% surge. They're talking about 1,000 crore capex that will also go to the EV vertical, plus the fact that the overall momentum continues to be strong. Listen in.
Took really giant strides in our international business, and we've reached a really exciting point of crossing 1 lakh mark in export shipments, which is, and for us, I think it's a real inflection point where we've got a very good virtuous cycle now in international markets. Seeing that inflection now in heavy duty trucks, where we've consistently been crossing 1,000, 2,000 units a month and crossing now 8% market share. So it's really at a point of inflection in both in RE and in VCV on two very important areas. Again, not giving any timelines for an EV product just yet in terms of when Royal Enfield's first EV product comes out. We will let you know subsequently when we are ready to announce any dates. But we are working tirelessly and a lot, but in a very focused way, as we do at Royal Enfield.
Okay, so that's a take on Eicher Motors. Let's go across to our technical experts now. And before the market, let's begin with Eicher Motor and the auto space itself. Kunal, your take, what are the top bets, and is Eicher Motor likely to go higher from here on?
Yeah, this is a good breakout for Eicher Motors, breaking past about 3,550 levels. This is a 4-month high for Eicher Motors. I think if I'm not wrong, it's managed to break past the highs of January 2023 or December 2022. So that seems to be a strong breakout. And I think we are now into that zone where the underperformers from most of these performing sectors are getting a leg up. So for example, Maruti also saw a good move about the 9,000 mark, managing to push up higher for itself. So there are many other candidates which have actually done well. So I believe, yes, Eicher Motors can see a decent upside from current levels. The previous high for the stock is around 3770 mark, which means potentially another 150 point upside from current levels is what we can expect.
Okay, Nuresh, afternoon. What is your take on the market so far, and of course stocks on your radar?
Interesting thing happening on the bank Nifty. Now we've crossed the recent swing highs, which is where we are pausing. That creates a short-term breakout above that 43,800 mark. That gives us an upside possibility that we may get into a new all-time highs much faster than we expected. So positive on the bank Nifty finally. It has turned to a buy from a pause. Nifty continues to be a hold. And overall, the broader markets, the momentum is good. In the bank Nifty, we've started seeing new leadership. Axis Bank making a breakout move. ICICI continuing with the leadership. It's only HDFC Bank which is left given that 1700, 1750 mark. But the rest of the banking names have started taking leadership. So overall, positive on the markets as such. Continue to ride on to the momentum.
Okay, right on to the momentum. Kunal, a big breakout happening for the bank Nifty as well. What, just 300-400 point away from the live high levels of 44,100 thereabouts?
Yeah, I think a good move, and today's move comes across with many large cap names performing. So ICICI Bank, I think, has given a breakout above 940 plus mark. IndusInd Bank has managed to cross above the 1200 mark. Axis Bank, after I think quite some time, has managed to come back above the 900 level. So many large cap names, private sector banks are the ones which are firing up. You still don't have any kind of a major breakout coming out into the other names. For example, IDFC First Bank is still languishing at the 64-65 mark, RBL Bank, Federal Bank, etc. So which means that this move is more powerful move because it's led by more large cap names breaking out of their multi-month highs. That indicates that we could be nearing as well as a potential breakout of the new highs for Bank Nifty possibly in the next 1 to 2 weeks.
Okay, and in the meantime, the big event to track today, of course, is going to be the Supreme Court observation, which is due to reveal its findings on the allegations directed at the Adani Group by Hindenburg Research, who accused the group of financial misdoings. Remember, the court had set up a 6-member panel which has filed its report this week on any regulatory failures and suggested reforms for investor protection. The court had also asked SEBI to separately investigate Hindenburg's allegations. SEBI, however, has sought 6 months, or rather 6 more months, to finish the probe. Sumit Chaturvedi, my colleague, is here to tell us what we can expect from this ruling today. Sumit, of course, is right outside the Supreme Court in New Delhi. Sumit, I'm guessing all action begins there right now. What's expected? What can we hear from the Supreme Court?
It's going to be there in half an hour, Aisha, that under the bench of CJI Chandrachud, the hearing will start on these two crucial, as we said, that hearings, two crucial hearings will take place. One on SEBI's application for 6-month extension. The second on this six-member panel. The submission of report is what it has submitted. So important thing to watch out for is this suggestions which have been given by this 6-member panel. As we understand, those suggestions will be read out or will be today told that this is something which has been suggested by this 6-member panel. Remember, the panel was formed for two things. First of all, to ask on what parameters overall were there any laxities as far as the whole Adani group was concerned, and second, to see whether there was some other issue or improvements that can happen. So one crucial thing is to look out for this 6-member panel suggestions that will come out today. Second is definitely SEBI's sort of seeking of extending the deadline by 6 more months. We also expect that to be extended by some more months because it will take time and market regulator will take time to do the proper investigation. So these two things are likely to happen in the court today. But anyways, it's difficult to really guess all the time what will exactly going to happen. The hearings are going to take place as a crucial issue of Adani Group. When Hindenburg report, it led to crashing of about 80% valuations in some stock of Adani Group, and today is the day when the hearings will take place.
Right, Sumit. We'll leave it at that. Shortly from now, we should be hearing Supreme Court's order on the observations in the Adani Hindenburg case. And we will, of course, get back to our colleague Sumit Chaturvedi, who's right outside the Supreme Court right now. In the meantime, we will take a very quick break, but be right back. We'll continue tracking markets on the other side.
Welcome back. We're looking strong for the market, 18,332, and bulk of those gains are actually coming in from the private banking names, as we pointed out. So Axis Bank, IndusInd Bank, these are your top gainers at the index level. But let's also take stock of some of the price volume buzzers, starting with Jindal Stainless itself, wherein there has been a bit of a breakdown from the upward sloping support. The volume is almost 2 times the 10-day average. Remember, the entire metal space has been coming under pressure because overnight we saw deep gashes on the global commodity prices. In fact, it was the biggest gash that we have seen this year so far. Let's pull up the intraday if we can of some of those metal names as well. So Jindal Stainless is one of them, and then Glenmark Pharma is the other stock, which has formed a higher low for the 7th session. It's hit the 52-week high on an intraday basis, and the volume too is almost 4 times the 20-day average. Delta Corp has hit a 4-month high on an intraday basis, volume at around 2 times the 20-day average. Naresh, your take on some of these counters, some of the metal names, Glenmark Pharma, Delta Corp?
So would not have a clear view on the metal names. All the metal names are on a different trend. Delta Corp is something which is coming out of interest because the stock has finally started making higher tops and higher bottoms on the short-term charts. Now the big resistance for the stock is around the 230 mark, which is the high for the last 1 year. Also pre-COVID, the stock used to be around these prices of 220, 230. So if it can cross above those levels, that would be a major trend change for the stock. And this is the only stock in the hotels theme which has not done really well. So looking at Delta Corp going forward, if it can cross 220, 230 levels, that could be a longer term trend change here.
On that note, let's listen into the management bites coming in from a couple of management. Dr. Lal PathLabs, for instance, is up around 6.3%. The earnings were actually not that exciting, but the management commentary is better. So that's stock holding with 6.3% gain. Let's cut across and listen into the management of Dr. Lal PathLabs.
Now, if you remove the COVID base, our patient growth is a healthy 8%, patient visit is 8%. But more importantly, our number of tests conducted is up significantly in strong double digits. On the routine side of the test, where we're able to bring in operating leverage either through better equipments, better buying of reagents, etc., we haven't taken a price increase. Our preferred mode of operation is not to take a price increase except when it becomes inevitable. This is our stated position for the last 6-7 years now, and we intend to continue on this. So we will take price increases where appropriate, not to manage margin profiles. Margin has to come from operating leverage and from test mix portfolio and volume growth. We will now move to the second phase of integration of getting in back-end synergies. And with that, one should start to see improvements in margin profiles. But more importantly, the suburban asset is built for scaling up our Western operations, which was a weak spot for us.
Let's just look at some of the other buzzing stocks in trade right now. And while iShares, of course, is only going strength to strength, the banking names as well are propping up. SBI is holding up by about 1%. There's Axis and IndusInd Bank as well, which are looking strong. And ICICI Bank as well, not looking all that bad, about a 0.6% move. But the focus, of course, has been on Kotak ever since the MSCI rejig got announced and the anticipated inflows which are going to come in into the stock to the tune of about $800 million as per Novama. That is what their estimate is. Specifically on the charts of Kotak Bank.
So I would be bullish on the stock. Over the near term, it's confirmed a breakout of multiple resistances, 1650 earlier. 1725 was the second breakout for Kotak Bank, and now it's moved into that 1900 plus mark. So the major resistance seems to be now out for the stock. It's coming into a zone where most of the other private sector banks are also starting to participate. So I think it's now a point that how strong and how far can this rally for these private sector banks last. But I would be of the belief that these stocks can see a further up move from current levels. Kotak Bank specifically towards 2050, 2040 is what I would look out for.
Okay, so that's the take coming in on Kotak Mahindra Bank. Let's welcome on board Mr. Gautam Sinha Roy as well. He's the Senior Executive Vice President and Fund Manager Investment at ICICI Prudential Life Insurance as well. Gautam, hi, thank you so much for making time and speaking with us. Let's begin by discussing the auto space because that's in the news. Of course, Eicher Motors reported a great set of numbers and now we're expecting numbers from Tata Motors. Your take on the auto space and any favorites there?
Good afternoon. I think it's a very pertinent point that you raised that, auto as a sector is doing well. We have the results of some of the companies. More is to come. I think this is a trend which will continue for the most of this current, at least the first half of FY24 is something where we'll see both volumes picking up, margins being strong, as well as, the profit growth YOY being very strong. So this is definitely looking like a very good construct. Only thing I would be mindful of, if at all, is which of these stocks are more structural in nature, which of these stories are more structural in nature, and maybe prefer to put the bets on some of them where we continue to see volume growth beyond FY24.
Okay, watching out for that volume growth, but what about IT? Very, very big distinction in terms of how the large cap IT has performed versus mid cap IT. Do you think it's the case of just a lag effect coming in for the slowdown in mid cap companies, or they're continuing to likely to outperform?
Yeah, so this dichotomy has been quite stark, honestly. So one should be cautious that, some of the mid caps which have been doing very well, they could also see some sort of slowdown because the demand environment there in the US is slowing down. But we also believe that this is a very shallow sort of a cycle for IT. So while next couple of quarters could continue to show weakness, but beyond that, what we expect recovery, not a very rapid recovery, but IT is a sector which structurally looks like a 9% to 10% USD growth story. And within that, again, you have to, pick your winners because some of these stocks will grow much faster than that.
Gautam, hi, afternoon. What's the view on cap goods? Because while manufacturing clearly seems to be the darling theme in the market, what we've heard from L&T is clearly making investors a little uncomfortable, purely on the execution timeline, I guess.
Correct, Asha. I think there's a dichotomy there too. I think the EPC biggie of the country is seeing some bit of a challenge in execution and margins. But if you look at the pure play cap goods technology companies, they are doing they're having a fantastic run. So we continue to prefer more of the, the cap goods, pure play cap goods companies in this space, although the valuations now are demanding. So it's not like, again, not something that you can.
Okay, Gautam, stay with us. We seem to be having a bit of a video issue as well there. We'll take a very quick break, but come right back. We'll continue our discussion with Gautam Sinha Roy.
Back to a conversation with Gautam Sinha Roy. Gautam, what's your take regarding the entire financial space, and if you can help us, differentiate between how private sector banks as versus the public sector banks are placed?
I think financials as a space, especially the private sector banks, if you see, they're quite cheap in terms of their PEs as well as price to books. We are seeing good credit growth, NIMs being at a record high, credit costs being low. So everything is hunky-dory for the private sector banks. I think that's one sector which should continue to do well for the rest of the year. Now, PSU banks have, of course, had a huge rally. So a bit, and nothing wrong with them per se, a bit of a caution in terms of the valuations having caught up to more normative levels. That's the only thing that we can see. And especially when it comes to deposit growth, we can clearly see that the private sector banks are doing much better there. So that's why a preference for private sector banks, especially the larger moated companies there, would be our stance for the rest of the FY24.
Right. Okay. Just, getting set, of course, for the Supreme Court announcements on the Adani Hindenburg row. In the meantime, iShares, Intellect Design, they really seem to be these stories today. Lalpat Labs as well has surged up quite a fair bit after its numbers, 6.5% higher there. Glenmark is looking very strong, 5.5%. Okay, Cipla's numbers 526 versus the Etina Polar 765. There has to be some extraordinary component there or a one-off. We will try and get you more details on that, because if that is what the operational figure is, that's a stark fall from what the market was anticipating. And to think of it, Cipla has been one of the best performers all through 2022 when it came to the pharma pack at least. And you are seeing a bit of a knee-jerk reaction come by for Cipla, 1.25% lower. Anisha, any more on the numbers? Because this
there
seems
is
a
an
little
exceptional.
off.
There is an exceptional item. You're right. 182 crore loss is what they're reporting with respect to the exceptional item, and that's why the profitability is looking lower than what the street was penciling in. Having said that, the revenue has come in all right, it seems. The total revenue from operations stands at 5,739 crore, and that compares with 5,260 crore. Maybe we should put up that exceptional in the flashes as well, so that the street is aware that there is a one-off of around 182 crore as an exceptional item, and that's the reason we are seeing a bit of a miss, because if you add it back to the profitability figure on your screen, then the numbers look in line with expectation or even a smidge better. The revenue for you up on the screen, which is in line with expectation at 5,739 crores. Segmentally speaking, we don't have much details. It's just the pharmaceutical vertical which has the highest concentration there, and we'll wait by to get more details from the press release as to how the India business has done, because the other of the pharma peers have been very, very volatile with their earnings as well. But overall, I wouldn't completely call it a bad set of numbers as of now. We'll have to look at the operational performance, because PAT is of course impacted by the one-off, and the revenue look in line with expectation. In the meantime, Gautam, what's your take on the pharma stocks at this point of time?
I think off late we have seen a fair bit of rally in the pharma stocks. There were multiple hypotheses. One of them was that the generics pricing in the US is coming down. Domestic growth has been decent, I would say. So multiple levers have played out. Margins have also been better. And above all, we have seen a couple of big product launches coming through, which has helped the sector. So I think a fair bit of rally has happened. And especially given that now the results are getting a little bit tepid, there's no harm in taking some money off the table in some of these names. Of course, there you have to differentiate between the Indian pharma names and the more US generic oriented ones. The US generic ones being more cyclical, the Indian ones being more structural in nature. So I think the preference gradually is shifting towards more of the India-focused names, especially ones which have a fair bit of chronic mix in their overall business.
Kunal, you like these pharma names, right? And I'm not talking about Cipla in specific here, which we're still awaiting more details on. Okay, the margin picture as well has come, and while the top line looks largely in line, I think there is a bit of a miss when it comes to the margins as well, because they've roughly reported about 20.4%, 21% is the kind of figure that the street was penciling in. So both on EBITDA and margin front, it is a miss from Cipla. But Kunal, your take on pharma, and if you had to execute a fresh long, where would it be?
I would still go with Glenmark Pharma. That was a call as well as a stock which I would recommend quite aggressively over the last few weeks, because that was a stock which was looking quite charged up, more steady, more consistent in terms of momentum, hardly any major periods of sharp volatility or correction to the stock price. And whenever the stock used to go into a correction of 2%, 2.5%, it used to get a follow-through price action on the upside. The other two names which I would also be keenly bullish on, one would be DV Slab, the stock confirming a breakout of its 200 DMA after a gap of I think around 8 months to 10 months approximately on a closing basis. So that's an attractive chart, indicates that the worst could probably be behind for DV Slab, and Biocon as well has made a very good comeback from those 200 levels to now 240, 245 where it's trading currently. So Biocon, DV Slab, Glenmark Pharma looks attractive from the entire pharma pack.
Okay, so that's a take coming in on the pharma pack. Gautam, on that note, we let you go. Appreciate you joining us on the show. But now we have Gurmeet Chadha joining us to make sense of what he's making of the market fundamentals. Gurmeet, let's start with Cipla itself. What's your take on the top pharma names? Dr. Reddy's managed to disappoint the street as well, and now Cipla looks like an operational miss.
Yeah, it looks like. In fact, there was a anticipation that once even as Gautam was pointing out that there was an anticipation that the results will be better considering the numbers which were coming in other pharma spaces, and the pricing pressure getting reduced. Also, they have a very solid respiratory portfolio. But probably needs to dwell more on the face of it. Looks a miss. Also needs to see what is the one time item which is reflecting exceptional loss of over 180 odd crores. So probably will review and take a call. But pharma in general, I think the valuations have been reasonable. You probably have to slice it further into what you want to look at it. I think branded generics is a good space. We saw a very good listing of Mankind this week, followed by some negative news on the other side of the business. And then you have this couple of good results in the CDMO API businesses. Syngene reporting very good numbers, Newline reporting good numbers, and then Loris had a soft quarter. So I think you got to be selective. But this is a lumpy business, the CDMO business, and you need to focus more on what are the molecules which have got commercialized, and if any of that can become really big and add significantly to top line and bottom line. And maybe I'm a little interested more even in the hospital space. I think that's another space we are tracking closely, including Apollo and Max Healthcare.
I always wanted to understand what you're making of the entire defense and railway space. It's fancied in the market right now, but just the kind of profit-taking off late that one is seeing in railways. Wanted to understand whether long-term investors should be using opportunities such as these to only add to their portfolio and maybe buy afresh if they have completely missed out on the names.
So, in general, we are very constructive on defense as a, very good theme for the decade. You have to, again, break it down into, so one is the PSU names, which are clear beneficiaries of the large orders, right? So you have HAL, you have BEL, and some of the other names, and HAL also with the MSCI inclusion has done very well at 3,000 odd levels. Then you have the second one, which are the, the private companies which are, fitting in the, defense ecosystem. Right, so you have some, in terms of, getting contracts. So one is the company we track is Solar Industries, which now defense constitutes about 10% of the sales, but they have a very good order book. Then there are bright prospects on Pinaka rockets, which probably you will see something materializing. Again, very lumpy. The orders can be very lumpy. The execution can be very long drawn. So you have to be careful on the milestone payments you get. And the overall government, then the export opportunities come, right? So India, surprisingly, we had 104 countries participating in the Aero Expo, which happened last quarter. If you see the recent, acceptance of necessities called AON, which DAC signed, it's about 2.6 lakh crores in FY23. That's a huge number. Also, if you see the orders allotted, under the, this called IDMM, indigenously designed, made, manufactured in India, that again was pretty solid for last year. So I think there is government push, there is import substitution, there is export opportunity, and there are some ancillary which are figuring out an opportunity in this defense ecosystem. There are companies in defense electronics like Paras. There are a lot of other companies which specializes. So to us, it's a very, very broad theme. You got to be more selective. So maybe half through PSUs and half through some of the smaller defense ancillaries is the right approach.
Okay, so that's the approach that you have at this point of time when it comes to the defense names. What about the mid-cap IT space? Gurmeet, any name that you like from this space? Because the numbers have been quite...
So we are neutral on IT. Reason being that I think we are not completely out of the woods. I think there is, while everybody thought this is a BFSI slowdown, but if you see the commentary, there is also slowdown in retail, high tech, a bit of it in manufacturing. So there is some postponement of decision making. There have been odd cancellations. Infosys got more impacted because of 40% exposure to North America. I think you will see probably some differentiation. The ones which are doing well, the valuations are pretty high. So KPIT has done very well, which is technically an embedded auto software play, if I were to quote it right, done phenomenally well in this environment. The mid-cap ones like Persistent and all, which have done reasonably better, again, does not have much valuation comfort. So probably maybe I think the long-term trend remains same. In fact, I'm of the opinion that AI will eventually create more opportunities. Even in the short term, it might disrupt more. So I think you've got to be more, maybe cool your heels for maybe a quarter or two. There are more opportunities on the domestic consumption side, which are right now.
Okay, Gurmeet, stay with us. Just winding up trade shortly. So I'm just going to get in some BTST trades as well going. Kunal, on your list?
So I'll go with a few banking stocks. The first one is a buy on ICICI Bank, suggesting a break, expecting a breakout, suggesting a buy with a target of 980, stop loss to be kept at 920. And IndusInd Bank is the other stock which I would be bullish on from current levels. Earlier I'd given a target of 1225, revising it slightly higher to 1230, and stop loss I'm trading it to 1185.
Right, and your closing ideas?
So that'll be on Axis Bank.
Okay, right. Naresh, wanted to get in your closing trades.
So closing trade would be L&T. That's a risk reward trade at 2200. Looks like a good entry point for the short to medium term. Expecting a bounce back from this one.
Okay, so that's the closing trade for you, Naresh. But what about the BTST idea?
So again, the BTST idea would be L&T again expecting a bounce from your stop loss at 21.90 and a target price of 22.16. Second is about Ujjivan Financial, that's given a short-term breakout, and we are seeing good momentum across the NBFC space. Stop loss at 298 and a target price of 315.
Okay, so that's the name, that's the take coming in as far as the BTSC ideas are concerned. But Gurmeet, you've been looking at smaller NBFC names like the the likes of Poonawalla FinCorp, and we got good numbers from the likes of even Ugrow, and then we got numbers from Five Star, etc. as well. How's the entire this microfinance, space looking like to you?
So, we are basically looking at two opportunities in this space. One is, the well-run ones, which have, time-tested track record, have stood the credit test. So something like, Chola, done very well. All, rich valuations, but, great performance. All loan portfolios coming back. Differentiation in cost of funds too. Then we like this, smaller NBFCs which are using the digital ecosystem pretty well. And are more small in size. So something like which you mentioned, Poonawalla FinCorp, 81% direct digital lending now in the portfolio. Legacy book largely behind. Cost of funds come down significantly because now they're AAA rated. Then we like this affordable housing segment. This space doesn't compete with banks too much. So Home First, even some of the the small savings bank, they provide credit in tier 3, tier 4 towns. To basically investors who are not in the formal credit circle. They were more relying on the informal lenders. So, I interacted with a lot of people from AU, Equitas, doing some great work. They're disbursing 5 lakh micro labs to, let's say, a Kirana store in a tier 3 town, which banks usually won't go. And the banks then buy, some of the affordable housing loan portfolio as part of the PSL, right? So it's more good collaboration. There's no competition here. So these are the pockets we like, but these are again high risk investments. One pocket which we tend to avoid is gold finance. I think that's where banks will probably they put the heat on to some of the gold finance NBFCs. So something like HDFC, for example, post merger, just has a 0.5% market share in gold loans. I think the banks can really ramp it up there, so the yields can come under pressure. So that's one pocket we avoid. Microfinance also largely avoid. Good digital ecosystem, affordable housing. That's what we like. In the NBFC space.
Vedanta numbers out shortly. We just have the PAT number for, with us from agencies. 1880 crore rupees on the PAT is what Vedanta has delivered. Stock under pressure, down 2%, as is the rest of the metals pack as well. Gurmeet, since we've got a bit of a color now coming in for how FY24 is likely to pan out from large part of India Inc., which has already delivered its numbers, wanted to understand from you, what themes do you think are going to take center stage in the market in this fiscal?
So, 2, 3 ones are. So we are, I don't think so. The 960 EPS, I think, should broadly be stable this year, assuming we do hit 11% nominal growth. So banks, auto clearly now offsetting the negative impact of IT. So I think we should be able to grow earnings at, maybe 13 to 15% in that range. So I think banks clearly, I think, for at least for in the more short to medium term, look good. Credit growth in March also was 15.7%. What I also like is if you see a look at the restructured pool, the ESL provisioning, the SMA 1, 2 book, I think looks broadly under control. Plus the provisioning, which means that future credit shocks would be lesser. That's what you worry in a bank, in terms of rising credit cost once the cycle turns. So I think those are there. Auto, I think, will have a good year. I mean, I think we probably chip shortage. The pricing power is coming back. Raw material cost is come down, and generally good launches. I think everybody has a very good portfolio, both on the petrol diesel side as well as the new age energy side. So that's, I think, on then there are niche themes. We discussed defense. I think housing. I think demand remains very robust. So you can play it through building material. Polycab recently reported great numbers, just an hour back. Just see the volume growth in cables and wires, and they maintain margin. So a lot of companies who are able to, who were suffering due to raw material cost will probably start getting some margins back this year. So that's what we like, and some of the niche names, select. So I think in a market which is 18, 19 times forward, it's more a stock pickers market. you had good numbers in Newland, you had poor numbers in Loris. You had good numbers in some of the banks. You had pretty average numbers in some of the PSUs. So I think it's more of a stock picking year this year, and just be anchored to earnings. I think that's the safest way to play till interest rates start coming off.
Okay, that's a take coming in. Vedanta for now is reacting negatively to its earnings, so we're watching out for that. Though on a Q&Q basis, the numbers look all right. The margins have improved as well. But there are more details trickling in for Cipla, so let's quickly address that. One India sales is up 3% year-on-year, 16% in the ex-COVID portfolio. The North America sales are up as much as 27% year-on-year. The international market sale has come in at around $95 million, though the R&D spend lies at around 6.5% of their revenue. Let's pull up Cipla because I'm talking about that in terms of how the revenue has been. Robust growth across branded prescription is what the company is saying. 16% growth adjusted for COVID as far as India is concerned. So there's a bit of recovery on account of that. US business has reported highest ever revenue of $204 million, a 27% year-on-year growth coming in the quarter gone by. And then the R&D investment is something that I talked about. There's a commentary coming in from Umang Vora as well. He's the MD and Global CEO. He says that our core operating profitability continues to be quite strong. We are excited for the upcoming year where we look forward to deepening our leadership in branded markets and expanding our differentiated pipeline in the US as well. So the commentary overall looks positive so far as far as Cipla is concerned, and other internals also don't look too bad as far as that number is concerned, and that's why the stock has now moved up in the green. The first reaction to number was a knee-jerk wherein we saw a cut coming in of almost 2%, but since then the stock has appreciated from the lowest point of the trading session. But we are now watching out for the earnings which are expected from Tata Motors. So what do we have to watch out for there? Shishti is joining us with those internals.
So definitely it's expected to be a good set from Tata Motors, wherein we have seen a good jump into the volume, especially the JLR volumes were very supportive with a jump of 9.5% on a sequential basis. There was a cool off of the commodity prices, as well as if we look at the operating leverage, that is also expected to kick in. Factoring in all of these, the revenue is expected to be up 18.5% on a sequential basis. The EBITDA margin is expected to expand to 12.4% this time around on a consolidated basis. And lastly, onto the profit figure from 3,043 crores last quarter, 4,300 crores is the expectation. But when it comes to the internals, then definitely we'll be watching out for the gel EBIT margin, because FY23 has definitely been a turnaround year for Tata Motors. They started Q1 of FY23 with a negative EBIT margin and then improving that further, and this time around the expectation is of a 6%. Other than that, the India business is also holding strong for Tata Motors, wherein we are expecting the standalone EBITDA margin to expand sequentially to 8.8% this time around. So these are the broad expectation onto the numbers, but definitely we'll be watching out for the dividend announcement. That will be after 2016 that the company will be announcing the dividend. So all eyes on Tata Motors.
Tata Motors, as is the case with Avenue Supermart as well, or popularly known as D-Mart. Let me take it across to Vinny, find out what to expect from them this time. Vinny?
So in terms of numbers that we are expecting from D-Mart, we have a fair idea of what to be expecting. Revenue growth of around 20%. Revenue is expected at 10,337 crores. Profits, a growth of around 17% coming in there as well. Operational performance also, we are expecting a decent terms of operational performance as well. EBITDA growth of 16% as well. Margins expected to be almost flattish. 8% is what we're expecting the margins to be on the year-on-year basis as well. And in terms of revenue growth, the 20% revenue growth is largely led by the store addition. Other than that, the general merchandise and apparel category, that's doing quite well. That's picking up pace in terms of growth from what it was impacted during the pre-COVID levels. So yes, it's not going to be at those pre-COVID levels, but a recovery coming in there is something that supports the margins of the company in turn, and that is why not a sharper contraction or anything in terms of a disruption coming in terms of margins over there. Margins expected to be flattish at around 8%. Company has also added 18 stores during the quarter, as well as they're reaching a total store count of 324 stores in total. Other than that, factors to watch out for, let's keep an eye out on the demand trends and what is the on-ground situation and commentary coming in on that front. How is D-Mart Reddy doing? Are we seeing a faster growth over there? The pace of growth that we're seeing in D-Mart Reddy. Other than that, store addition plan, as well as anything commentary coming in terms of any price are still required, is something that we're watching out for.
Thanks, Vinny, for that. In the latest that we have from the Adani Supreme Court verdict, we know that the three-judge bench is seated already, and the hearing is just likely to begin at any point of time. So we're watching out for what happens from that particular verdict as well. But in the meantime, wanted your take, Naresh, on a couple of these losers today. Balrampur Chini, wherein the debt actually jumped as much as 3 times on a sequential basis, and then Manappuram Finance, wherein we are expecting the numbers later today.
So Balrampur Chini has been the surprise one. Was bullish on this, got stopped out today. The stock for the last almost a month tried to sustain above that 400, 410 mark. Was setting up for a breakout, and again we are back to the good old range of 360 to 400. So overall, short-term trend change here, sustaining below 400 makes it go back into the range, and the breakout could be some time away now. So for now, range-bound moves. Manappuram not really at it. The stock has been a underperformer on various time scales. In the near term, also post the announcement of the raids, etc., the stock has not been able to recover back from it. Only cases 100, 105 is a support, 125, 130 is a resistance. A big range, but that should hold for a period of time going forward.
Right, okay, just looking at some of the closing rates then, and Intellect Design, Eicher Motors, Lal Path Labs, Glenmark, Polycab, these are all going to go home as very steady winners. DMart, Tata Motors all set to report their numbers tomorrow. You are seeing on your screens that there is a price volume breakout in quite a few of those stocks. But yes, on the flip side, there's also Balrampur Chini, which we just highlighted, which is down about 5%. Hindalco hasn't seen any recovery, still down by 3.5%. Kunal, what's on with metals, and especially Hindalco? Because even Novelis's good performance yesterday didn't rub off on Hindalco. It was a rank underperformer yesterday too.
Yeah, difficult to categorize that what actually went wrong, but in terms of prices, I was actually not too much enthused with many of these metal rallies, metal counter rallies in the last 1 month, because there was no major kind of a breakout. So neither JSW Steel, which is the more formidable name, because that's a sign of a more consistent name from the metal pack, nor even the likes of Vedanta, SAIL, even Tata Steel. The stock had, I think, a flashy kind of a rally just pre-result, but post-result the stock went into a correction, or I think it was just at 10-15 mark broadly. So no major signs of a breakout which emerged for most of these metal stocks. And I think that was one of the reasons why I was not looking at the sector as such for the near term. In fact, now after this 2-day, 3-day correction for Hindalco, it's actually come back towards a good support point. So the indicators are oversold, stock at 400 levels, which was the previous major swing low for Hindalco. So now I think could be a zone where traders who would have probably earlier missed out buying the sector, I think should start chipping into the name. Hindalco, I think sub that 400 mark is attractive for a contra buy.
And of course, for commodities, it's a rub-off impact, I believe, of what's happening globally as well, because overnight there were cuts to the tune of 2 to 5% on a lot of these commodities. So maybe just that is what is playing out at this point of time. The Adani matter has started as far as the Supreme Court is concerned, but we'll of course wait back for the verdict. We are getting you the live updates with respect to what's happening in that particular case as well. But coming back to the markets and discussing what's happening in these individual names, Gurmeet, what's your take on Zomato and this entire ONDC buzz that we are hearing? Do you think it could really be a threat or a big competition to Zomato?
I personally think it's a little early. A lot of people are calling it the UPI moment in payments, UNDC. We don't know how these companies will pivot. My own sense is that probably companies need to relook at their business models, and maybe there was a time where size was the differentiator. I think we're probably entering a time where people who shrink and pivot better would probably survive. So even in, let's say, for example, Zomato, less than 10% contribute to 75% of the orders. Right? At some point of time, they need to probably relook at Blinkit and the food delivery and grocery business also, because that's a cash guzzler across. I've not seen many companies make money on that, and need to pivot. They have a great delivery channel. They have their own riders, huge access to data base, and there's a lot of value addition which is happening. So a lot of the companies need to pivot, and just because the stock is down doesn't make it a value buy. We are not in an environment where interest rates are likely to come off quite quickly. Inflation is sticky, so it will be long drawn. So I would broadly tend to avoid a lot of these new age companies. But if somebody shows turnaround, pivots, starts making cash flows, I think, And the other thing is there is more shake-up left in the private market. We saw Vanguard, downgrading the valuations, Invesco downgrading the valuations for Swiggy, Vanguard for, Ola. There's some news on Oyo also seeing 50% reduction in the valuation. So I think there's a lot of shake-up left in the private market, which will have again some impact on the listed players. So I think for me, it's a wait and watch for now.
Right. Just taking a leaf out of that, from the larger consumption basket, Gurmeet, and especially the urban consumption trend. I mean, the likes of a Trent, AFRL, what one has already seen with a Manyavar, for instance. From this large extension and bucket, where is it that you find comfort? Because, while everyone's convinced about the story, the other thesis is about valuation, whether the growth numbers are going to justify the valuations these stocks are already quoting.
No, I agree with you. I think there is not much valuation comfort there. I think one place which probably to me still looks strong despite the run-up is this hotel space. I think if you see Indian hotels, I think quarter on quarter they're reporting some stellar set of numbers. Also now guiding for 33% margin. The model is now asset light with probably pivoting towards 60% owned and 40% in terms of management contracts. That's what they're headed to, and maintaining those kind of margins. I've not seen these kind of occupancy rates and ARRs. So I was checking with some local people in Indian hotels, a lot of leisure locations like Goa, etc. The average room times have been upwards of 30,000, and throughout the year, I mean, hardly any drop there. Something like maybe a Lemon Tree, they have almost 600 room capacity coming up at Austria, which is the Mumbai airport. Plus this year you have G20, Men World Cup, a lot of events lined up. So I think earnings are going to be pretty strong. A lot of operating leverage will pay out, but valuations are slightly on the higher side. Indian is probably 35, 40 times forward, and maybe Lemon Tree is about 27, 28 times. But I think there is earnings support here, and maybe QSR. I think that's one basket I like more for a long term, which I think that our cooking time eventually is only headed lower.
Okay, so that's the take as far as the overall, consumption basket is concerned. Just 2 to 3 minutes left for the trading session, and of course, we are tracking what's happening with the entire Adani group of stocks. But for the week, it's not been too bad. Nifty has been advancing for the third straight week this time. It's Dr. Reddy's Lab as well as L&T. Which have been a bit of a laggard as far as this week is concerned, because overall these two earnings were a bit disappointing. Let's pull up the weekly chart and see how they have stacked up. Okay, so for the day, 18,310 is where we are shutting shop, just around that green line. It was the case yesterday as well, that we were just around that flat line. Though the advanced decline ratio have been favoring the decline, so the broader markets have been underperforming today. The heavy lift, of course, was done by the banking name. So the Bank Nifty was showing a solid gain of around 320 points, and it was names like IndusInd Bank, Axis Bank, SBI. These were top movers today. Can't forget Eicher Motors, because that was up around 6% on account of the result reaction. Had a bit of rub-off impact on M&M, which goes home with a gain of around 2%. And Tata Motors ahead of its earnings was a bit somber, maybe waiting by to see what the company delivers. What did not do well today was clearly commodity as well as energy. So Hindalco was down about 4%. BPCL has seen a cut of around 3%. And then utilities and power names like Power Grid and NTPC, something that we are watching out for as well. In the broader market, it was all about the mid-cap IT space. Intellect Design, 14% gain on that one. Zensar Tech, a big beat coming versus expectation, and that solid margin performance of 14.5% is what the street liked. Dr. Lal Path Labs, the commentary is something that gave the confidence to the market, so gain of around 7% there. Glenmark Pharma also perhaps saw a bit of rub-off impact, 6% gain. And then Cipla managed to report a decent set of numbers, especially on the internal front. So ends with a cut of around 1.3%, but maybe the street will take time to digest that particular number as well. On the losing end, there was a small company known as PDS, which saw a cut of around 8%. Balrampur Chini, the debt issues really continue, 5% cut coming in there. And Manappuram Finance, ahead of its earnings, was also quite weak today, Aisha. We saw a cut of almost 5% on Manappuram Finance.